Ark Invest just published this new video that hints at how Tesla could deliver 8 million vehicles in one single year in 2026, which would far exceed 50% year-over-year growth, which in 2026 would result in about 4.6 million deliveries in one single year. So this is exciting stuff. Let's get into this.
Cumulative doubling in production, you get a fixed percent cost decline. And that's what we're seeing here on the chart on the left. And that fixed percent cost decline for lithium-ion batteries is 28%. So a 28% cost decline for every doubling, cumulative doubling. And why the battery? You know, there's a lot of parts that go into an electric vehicle. The reason we're choosing the battery is because it's the single largest cost component of the electric vehicle. So
looking at this chart, it is shocking how predictable it is in terms of the cost for batteries coming down. It's just straight down in a perfect line. This is very interesting, but also very useful because we can predict exactly what's going to happen in the future to the cost of batteries. And batteries typically cost 20 to 25% of the total cost of a vehicle. So this is a big deal. And in the future, because if you want more range, right now, you know, you can't really increase that cost because the car is already so expensive and the range is still not that good. But in the future, we want more range. So the battery cost is very important because we need a lot more energy in the batteries, which is going to be more expensive to produce later to have higher range. But because the costs are going to be coming down so much, the effect will be very positive.
Automakers who have the efficiency such that they can use a lithium iron phosphate cell, because they have the efficiency so they can use the less energy dense, cheaper cell and still reach an acceptable range. Whereas you'll have people who are laggards in the industry who will still be using that more expensive cell to achieve the same level of range. And that could provide some interesting dynamics.
So LFP batteries are much cheaper to produce, but they are not as energy dense, and therefore most manufacturers right now still choose nickel-based batteries, which are much more expensive, but they are much more energy dense. They weigh a lot less, so that gives you higher range for your electric vehicle, because you don't want the battery to be so heavy, because the heavier the battery is, the lower your range is going to be, and then you need an even bigger battery to increase the range, and this is just not good. But Tesla, for example, is probably going to be able to vertically integrate. And what Ark Invest analyst is saying here is that companies like Tesla will have a very huge advantage because they will be able to use LFP batteries, because they will have a vertical integration, whereas for other automakers, they will not have that vertical integration. So for them to achieve that same competitive range, they will have to use nickel-based batteries, which are going to be much more expensive, and then their profit margins are going to be less. So this is quite a difficult problem that these automakers are going to have.
Back in 2019, we did modeling that showed that it was already cheaper for like electric vehicle relative to a Toyota Camry. And you can see that with a number of fleet orders, whether it's taxi companies, Uber drivers, police departments who are shifting over to electric vehicles because of that total cost of ownership. But then the price parity matters, because this is the point when you'd go into a car dealership and the car dealer says, you know, do you want this electric vehicle that's $24,000, or do you want this gas-powered one? It's identical except for it's gas-powered and it's $25,000. At that point, it's you know, we think it's a no-brainer where demand starts to tip over. But the reason that we're focusing on cost in this chart is because the technology cost declines are very clear, but the dynamics for price could be a little bit harder to predict, and we could see a few different things taking place. So already today, we're seeing that demand for electric vehicles is exceeding supply. And so you need competition potentially to drive down these costs or the price. So people are competing and the consumer wins from that element. But what we're seeing is that traditional automakers are pretty behind when it's coming to this transition. And there's talks of subsidies coming in. And so if a subsidy comes in and you have traditional automakers who now are producing vehicles profitably because of that subsidy, but they're not really passing that subsidy on to the consumer. They're just raising the price of their own vehicles. And that
Many great points there. What we are already seeing is that the cost of ownership is already less of electric vehicles. So this is a done deal. I am still so surprised that some people are not fully convinced. And admittedly, there's less and less people like people that are like that now. But if you watch one of my previous videos about why Teslas are always on fire, in the background, you will hear just two people talking that witnessed a Tesla fire saying, "Oh, I hate electric vehicles. I'm never getting an electric car." Let's see how that goes a few years from now. Then the prices of electric vehicles, the sticker price, the price that you see when you go to the dealer is lower than the price of a car that is gasoline. At that point, it's a no-brainer, a complete no-brainer to everyone. But already, if you do just a little bit of research, it's a done deal. It's already cheaper to own an electric vehicle than to own a gasoline vehicle.
also models improvements in electric vehicle charging rates. And so the ability to charge an EV quickly is impacted not just by the vehicle and the power electronics there, but by the charging infrastructure. And what you can see is that, since, very early days in the auto industry, 1915, all the way through last year, 2021, there's been pretty consistent improvement in charging rate. And we think that this is going to continue through 2026.
I think that has been one of the biggest understatements ever. A pretty consistent improvement. Well, what I see here is basically a completely straight line all the way from 1915 to 2021. This is very straight. And anyone who's skeptical about charging rates, they should really see this chart. It's very hard to argue with numbers. It's a straight line between 2 points, and look how consistent it is for 100 years. I mean, for how long did we have electricity? This is a long history. And we're going to get into how this applies to Tesla specifically with vehicle sales very shortly.
And we can see that the median performance of electric vehicles in 2021 is approaching Tesla's performance in 2018. So this is, kind of where we get that sense of Tesla being 3 years ahead of the rest of the industry. And when you look at the y-axis here, you can see the way that we're defining this index is looking at charging rate divided by vehicle cost. And that's not because charging rate is that important in and of itself, though people like cars that charge fast. It's because charging rate encapsulates the efficiency of the vehicle, the range of the vehicle, and the power capabilities of the vehicle. These trends should continue, and we think there will be a roughly 8-fold increase in performance of electric vehicles over the next 5 years. And
now, just one single metric, and we could argue about that, but in the end, it's extremely clear that Tesla is far ahead of everyone else, at least 3 years ahead of everyone else. Everyone else is having such a hard time catching up to Tesla. And the only reason why Tesla does not have a bigger market share is because they just cannot make more vehicles. That's the main reason.
So with all of these improvements, we're seeing electric vehicles continue to take share from gas-powered vehicles. And it's pretty remarkable. In 2021, EV sales soared. They were up 112% year over year, while gas-powered sales were estimated to be up just 1.7% off of very depressed levels from COVID. And so just looking at this chart, I think it becomes fairly clear that the incremental demand for vehicles is going towards electric. And
these are very conservative statements, I would say. The words are chosen are very conservative. I think it's extremely obvious that electric is the way to go. There's no more arguing about that. Just take a look at the chart. Electric vehicles are growing. Gasoline cars are decreasing even from these super suppressed levels. It hasn't recovered much. And mostly why electric vehicles are not growing more is because you just can't get an electric vehicle. I walked into BMW and I said, when can I order a BMW i4? And we said, 2 years. It would take 2 years to get the delivery and probably it would get delayed. If I really wanted a BMW, then I'm not waiting for the electric one. I would just buy a gasoline one. I don't want to wait for 2 years. So that's why it looks like gasoline cars grew a little bit, but in reality, they are going down because you just can't get an electric vehicle anymore. Or to be more clear, it's just hard to get one. The wait lines are insane.
Chart on the left, you're seeing that traditional S-curve, and you see even in the very early years with high growth rate, there's a declining year-over-year growth rate every year. So it goes 140, 138, 135. And with electric vehicle sales, they've gone from 60% in 2013, and now they're at 112% in 2021. And the reason for that is that we're seeing layered S-curves on top of each other as new electric vehicles enter different price segments. And so it's coming at the high end and it started that adoption curve. And then you got the cheaper vehicle, more mid-range, and it started that adoption curve. And it's leading to the tremendous accelerating growth.
So many people think that the growth of EVs is not going to be as high as it is right now, but actually it's going to be accelerating. Not slowing down, accelerating, not in absolute numbers, in percentages. When you think about it, these are going to be big, massive numbers. It's going to happen faster than most people think, the adoption of EVs.
I think that EV sales could increase eightfold from 4.8 million to 40 million during the next 5 years.
These are large numbers. So Tesla right now basically has about 20% market share. And if in 2026, there are 40 million EVs sold in one single year, if Tesla manages to maintain that 20% EV market share, then Tesla would sell 8 million vehicles in one single year. However, when we look at ARK's 2026 example projections, and we just take the bear case, not even the base case, the bear case, they are projecting that Tesla will sell 10 million vehicles in one single year in 2026. If you take the bull case, which basically has a 25% probability, 17 million vehicles sold in one year. And remember, ARK Invest historically has been too conservative predicting Tesla's prices for the stock. I'm not saying Tesla will sell this many vehicles, but this sure makes me excited. You have to come to your own conclusions. What I think is Tesla will 10x by 2030, mostly because of full self-driving. I believe Tesla will be the first one to solve actual full self-driving that will work anywhere in the world. But even then, if they do not do that, I think based on today's stock prices, which are hovering at around $700 when I'm recording this on Friday, May 27th, I think Tesla stock is way underpriced, even at current prices, even if they never solve full self-driving. So that's just my opinion. I will be making more videos about breaking down my beliefs about Tesla bull cases, bear cases, breaking them all down, Tesla full self-driving news. If you watch my channel, there's many full self-driving videos. I mean, one video, why full self-driving is basically done. There were 3 arguments, and then I dissect them, whether that's true or not. You watch a video, and you will see for yourself whether these 3 particular arguments have any validity to them or not. And what gets me even more excited, and of course, this is not financial advice, by the way, none of this is. Consider this comical advice, because as we all know, investing all of your money into one stock is maybe not very smart. And what did I do? I took all of my S&P 500, sold all of it, and put all of that into Tesla stock. Now, I own other assets, so not all. Even if Tesla goes down to 0, I'm okay. But out of all the publicly traded stocks, Tesla stock is the only one that I own, because I believe the stock has a risk, the same risk that most big companies have, but return that of a startup, potential return that of a startup. If you look here, Ark Invest projects that Tesla by 2030 would be at $20,000 per share. That's a lot more than 20x from where we are today. Those returns are gigantic, astronomical, insane, unbelievable, one of a kind with that kind of risk. I believe it's the biggest opportunity in my lifetime where you can get such big returns with such relatively low risk. Not financial advice again, comical advice. My name is Matt Pocius. I'm a millionaire, serial entrepreneur, and investor. Watch other videos on my channel. I have a lot about full self-driving. You can see how full self-driving progressed from the beginning of this year to now. In the beginning of the year, it was still pretty bad, and now it's getting pretty good. Sort of. It's definitely a lot more better. I still don't have access to my FSD beta. I'm a little bit upset. I'm in Canada, by the way. I've been waiting for FSD beta for a long time. That's why I got the full self-driving package for my Model 3 long-range all-wheel drive vehicle. So I'm a little bit frustrated. I want to make videos with full self-driving beta. I want to see for myself, experience it, feel it for myself, because that's the main reason why I own only Tesla stock out of all of the publicly traded stocks that you could buy. Another good video to watch, by the way, if you haven't seen it yet, is why Elon Musk's predictions for full self-driving days have been completely wrong. That's a good breakdown video. Watch that. Just browse through my channel and you will see it. And if you're not convinced about full self-driving, watch another video that I did, which proves and shows you about 1 hour of full self-driving, no interventions. If you haven't seen that video, it will make you a believer. Watch that one, and I'll see you there. Thank you.